Hello, welcome to Incentive Time. My name is Kelvin, and today we're diving into a topic that has stirred up quite a bit of confusion, debate, and mixed opinions. At JE Consultancy, we believe this is the right moment to lend our professional voice to the conversation, and that topic is none other than the Road Infrastructure Tax Credit Scheme, introduced through an executive order during the last administration. So, here's the big question. Is the road infrastructure tax credit an incentive? The answer is yes. Next question. Is it a tax expenditure? That's a capital no. Now, before we go deeper, let's break down what a tax expenditure really is, in simple terms. At JE, we define tax expenditure as revenue foregone by the government, either due to the structure of the tax laws or as a result of the legislature that is guiding tax regimes in a particular geographical location. But how does that apply to the road infrastructure tax credit? Let's walk through the operational logic. Imagine Company A owes taxes to the government. Instead of paying the full amount in cash, Company A approaches the government and says, "We'd like to use part of our tax obligation to construct a road, perhaps in the area where our business operates. This road is critical to our operations, and improving it could significantly boost our productivity and access." The government then evaluates the proposal using established guidelines. If approved, the company might be told, "Okay, your tax obligation is 100,000 naira. Use 50,000 naira to construct the road and remit the remaining 50,000 naira to the government." Now, in that sense, that automatically negates with the definition of tax expenditure because the government is not losing that revenue. The taxpayer is still paying 50% of 100,000 naira, 50,000 naira to government, and is using 50,000 naira to construct road, which is supposed to be the government responsibility. So, whichever way you look at it, 100,000 naira is still coming out of the taxpayer's purse. So, to that extent, did government forego that tax? No. They simply allowed the mode of application to be adjusted. Instead of everything going to the Federation account, then on a particular day, this money will be shared to the 3 tiers of government. But now, this particular kind of tax payment is where 50% is paid to that government account, while 50% is used for infrastructural development. So, why are people getting confused when it comes to road infrastructural tax credits being a tax expenditure or not being a tax expenditure? From JE Consultancy, we know that it is not a tax expenditure. It's important to understand that not every tax incentive is a tax expenditure, but every tax expenditure is drawn from tax incentives. This particular scheme is one of those that clearly sits outside the tax expenditure bracket. Now, let's touch on the 2% top-up, perhaps the source of most of the confusion. The regulation allows a 2% interest top-up from government to the taxpayer. Why? Because the taxpayer is using their own money up front at a time when government funds might not have been immediately available. That 2% is simply to cover the time value of money, a way of saying thank you for stepping in early. But this 2% shouldn't mislead us into thinking the entire process is a tax expenditure. It's a minor incentive, not a signal that revenue is being waived or lost. At JE Consultancy, we're clear on this. The road infrastructure tax credit is an incentive, not a tax expenditure. You will say, what does this young man knows about tax and tax administration and tax incentive? This young boy had come again. I agree. I am young, but I think I'm breathing wild. Though I'm a child, I want all of you ponder up over this. Thank you.